50% silver crash is not just a hypothetical headline anymore, because silver already went through a violent drawdown earlier this year and then stabilized. I'm building the script around that tension, rather than repeating the raw outline. Hello everyone, and it has only been a few months since silver delivered one of the most dramatic price swings this market has seen in years. First, surging into a frenzy, then collapsing hard enough to shake out weak hands, and now trying to rebuild its footing, while the dollar, inflation, and government policy are all moving in directions that matter far more than most people realize. Today is Sunday, May 17th in New York. What day and date are you watching from? Tell me in the comments. And right after we begin, if you value the way I break these stories down, support the channel by subscribing and commenting, Our John Ag. So in this video, I want to make sense of an issue that sounds simple, but really isn't. Whether silver is headed for another enormous decline as the dollar keeps weakening, or whether that frame misses the larger story. Because the first thing we need to say is that silver already went through a move that looked like a crash. From its winter high to its spring low, it gave back roughly half its value before stabilizing. That matters, because anyone warning that silver can suddenly fall hard is describing something the market already proved. But that does not automatically mean the long-term thesis is broken. In fact, the more important issue is whether that violent drop was the end of the move, or simply a reset inside a larger repricing cycle. And this is where I think a lot of people get trapped. They see a huge metal rally and assume every pullback means the party is over. Or they see a huge drop and assume every rebound means the next moonshot begins tomorrow. Both reactions are too emotional. Based on recently published numbers, silver remains structurally tight, even as some industrial categories cool and recycling responds to higher prices. That is not a one-direction story. It is a market with real upside fuel and real shakeout risk. And when a market carries both at once, it does not move politely. It moves violently. Now, before we talk about the dollar, resets, or policy interference, we need to deal with the elephant in the room, and that is the idea that price alone tells you everything. It doesn't. Technical charts can help with timing. They can show where panic may exhaust itself, where momentum is stretched, and where buyers have stepped in before. But charts cannot explain why silver suddenly becomes strategically important to governments, why buyers accept higher prices to secure supply, or why a metal can be under pressure one month and politically favored the next. That takes context. And the context changed. Silver is no longer just being discussed as a monetary metal or an inflation hedge. It is now part of the American critical minerals conversation. That does not mean Washington has declared a silver bull market. It means policymakers officially view the material as more strategically relevant than they did before. And from recent policy updates, the United States and Mexico have already explored border-adjusted price floor ideas for critical minerals more broadly. I want to be careful here. That is not the same as saying a hard silver floor exists. It does not. But the fact that governments are even discussing price support architecture for critical inputs tells you the market has entered a different category. And that brings us to one of the most misunderstood ideas in this entire debate. A possible support policy is not automatically bullish in every scenario. It may encourage production. It may attract investment into projects that looked uneconomic before. It may also create political uncertainty, because markets do not love being told where prices ought to sit. So when people hear price floor and immediately shout that silver can only rise, I think that is too simplistic. A floor can protect producers, but it can also invite new supply over time. The shorter-term signal may feel supportive. The longer-term consequence could be more complicated. That is why we need to think, not chant. Now let's move to the dollar, because this is where the headline gets dramatic. People hear dollar collapse and imagine an overnight breakdown, empty shelves, rejected cash, and some kind of official announcement that the system is done. I do not think that is the most realistic path. The latest international figures still show the dollar on one side of close to 9 out of 10 global currency trades. It also remains the largest reserve currency by a wide margin, even though its share has drifted lower over the decades. Those two facts can both be true at once. The dollar can remain dominant and still lose purchasing power. The dollar can stay in the center of the system and still buy less over time. And for metals investors, that second point matters more. Because silver does not need the dollar to vanish in order to rise. It only needs the purchasing power of paper money to erode, real-world costs to stay sticky, fiscal deficits to remain uncomfortable, and investors to become less satisfied with storing wealth in assets that struggle to outrun that erosion. Based on recent inflation readings, headline prices have accelerated again, with energy playing a major role. At the same time, cash-like yields are not sitting comfortably above that inflation pulse. That setup can renew interest in hard assets without requiring a Hollywood-style currency funeral. And that is where the debate over reset needs to be cleaned up. I do not see a clean return to a gold-backed dollar being quietly prepared behind closed doors. Governments rarely volunteer to surrender flexibility. What I do see is a steady effort to modernize, digitize, and monitor payment systems more deeply. The official conversation around central bank digital money remains exploratory, but finance is unmistakably moving deeper into digital systems. So, if the dollar changes over time, it may not happen with fireworks. It may happen through new rails, new rules, and new forms of settlement that still carry the same dollar name. Evolution is often harder to notice than revolution, but for households, it can matter just as much. Now, just before we move into whether silver could face restrictions, taxes, or another hard pullback, I want to say something plainly. If you're successful, share your success story in the comments so others can stay motivated. People need to hear from those who stayed disciplined and did not let every frightening headline knock them off course. So ordinary buyers may eventually face more friction when trying to acquire silver, but a direct ban is not my base case. It would be politically loud, legally messy, and difficult to enforce in a market that includes coins, bars, collectibles, jewelry, and industrial uses. The more plausible pressure point, if governments ever decide they want to discourage retail accumulation, would be taxes, reporting burdens, or unfavorable treatment when people sell. We have seen governments prefer friction over prohibition many times before. Friction is quieter. Friction changes behavior without creating the same explosive backlash. And if precious metals become more important in public debate, that possibility deserves monitoring. But we also need to avoid turning every policy rumor into a certainty. Too many people jump from officials are studying a market to they are coming for your stack next week. That is not analysis. That is anxiety wearing a suit. The better approach is to watch what governments actually publish, how rules are drafted, and whether silver is treated like a strategic input, a taxable asset, or both. Right now, the official direction points more clearly toward supply chain strategy than toward confiscation hysteria. Now moving on to manipulation, because this subject always comes back whenever silver falls hard. There have been documented enforcement cases involving spoofing and deceptive activity in precious metals futures. That is real. It happened. But here's the counterpoint people need to hear. The existence of manipulation does not prove that every downturn is artificial, or that every rally is destined to explode straight upward once the villains lose control. Markets can be influenced, distorted, and still respond to legitimate forces like profit-taking, tighter liquidity, rising recycling, weaker fabrication demand, or traders reducing risk after an extreme run. If you blame everything on manipulation, you eventually stop studying the market, and that is dangerous. In fact, the silver story right now is stronger when it is told honestly. Industry researchers still expect another annual deficit in the silver market, yet they also see some softness in industrial demand, especially where manufacturers are using less metal per unit or substituting away at the margin. At the same time, physical investment demand has firmed, and tightness in certain wholesale channels has remained a talking point. That combination is why silver can fall sharply, recover sharply, and keep producing headlines that feel contradictory. The market is not simple because the inputs are not simple. Now let's talk about the idea that if silver eventually reaches much higher prices, the broader economy must be in total ruins. I think that argument overstates the case. Expensive silver can reflect monetary debasement, supply friction, investor preference, and industrial strategic value all at once. It does not require civilization to collapse. Look at gold over long periods. It can rise substantially in nominal terms while daily life continues, businesses operate, and people still go to work. The price move says something about the currency unit and the investment environment. It does not automatically tell you that tomorrow is a disaster movie. That does not mean everything is fine. Washington's fiscal path remains troubling. From recent budget projections, deficits are expected to stay very large for years, interest costs are rising, and the debt burden is projected to keep climbing relative to the economy. Add demographic pressure from aging populations and growing entitlement obligations, and you have a long-term backdrop that naturally keeps hard asset conversations alive. In the early part of the next decade, major retirement financing questions become harder to ignore. That does not guarantee nonstop inflation. It does mean the pressure to solve problems with easier money, higher borrowing, or both will not disappear. And that is why I do not view silver as a one-quarter trade. I view it as a volatile asset inside a multi-year monetary and industrial debate. It can fall hard again. It just showed you that it can. Another drawdown could reach frightening territory, especially after a crowded rally or a sudden shift in rates, energy prices, or risk appetite. But the more important question is what happens after the drop. If the structural deficit remains, if critical minerals policy stays active, if inflation refuses to fully settle down, and if the dollar slowly loses purchasing power while remaining systemically dominant, then a big silver sell-off may become less of a funeral and more of a brutal checkpoint. Now, I also want to challenge one more assumption. Some people speak as if silver must outperform simply because the dollar weakens. That is not automatic. If the dollar falls because the economy is slowing sharply and industrial activity rolls over at the same time, silver can struggle even while the currency story supports gold more cleanly. Silver wears two hats. It is a monetary metal, but it is also an industrial metal. That dual identity gives it extra upside in the right environment and extra vulnerability in the wrong one. Anyone who talks about silver without respecting both sides is giving you half an analysis. So when I look at the market now, I see three forces fighting for control. First, monetary stress supports the idea of owning scarce assets. Second, industrial and strategic demand keep silver relevant beyond bullion circles. Third, high prices eventually call forth responses, whether through recycling, substitution, or new mine investment. The battle between those forces will decide whether the next major move is a continuation higher, a choppy sideways digestion, or another punishing washout before the trend resumes. And this is why I would not build my entire worldview around one analyst's price target or one viral chart. A target can help frame a scenario. It cannot replace judgment. From recent market updates, one of the most useful lessons is that silver volatility is no longer theoretical. We watched a powerful surge, a brutal reversal, and then a partial stabilization in a short span. That is the kind of market that rewards position sizing, patience, and emotional discipline. It punishes people who borrow conviction from thumbnails and then panic when the candle turns red. If you are involved in silver, you need a thesis strong enough to survive bad weeks and flexible enough to absorb new evidence. And yes, preparedness matters. Households should think about emergency savings, essential supplies, and practical resilience. But I do not think the best financial plan is one built entirely around collapse fantasies. Prepare responsibly, invest thoughtfully, keep your mind clear. The future is usually messy, not cinematic, and the people who do best are often the ones who avoid both denial and hysteria. So, as we wrap things up, here is my bottom line. Silver can absolutely suffer another major decline. Anyone telling you it cannot is ignoring history and ignoring what just happened. But a severe pullback by itself would not prove that silver is finished, and it would not prove that the dollar is suddenly healthy again either. The dollar's weakness is better understood as a long erosion story than an overnight disappearance story. Silver's strength is better understood as a volatile repricing story than a straight-line rocket. Put those together, and the most realistic outlook is not calm. It is turbulence with a reason. If this helped you think more clearly, leave a like, share it with someone trying to sort through the noise, and stay focused on the facts instead of the fear. So here's the final question I want to leave you with. Do you think silver's next major move will be driven more by weakening confidence in paper money, tightening physical supply, or the collision of both? And just to be clear before we close, this discussion is meant to educate and sharpen your thinking, not to tell you what to buy, sell, or hold. Markets are risky, personal circumstances matter, and every financial decision should be made with your own judgment and, where appropriate, qualified guidance.